Oh man, the market is down. It's not looking good for the market right now. Let's take a look so we can see Bitcoin is down 7.7%. We can see Ethereum down 8%. We can see Cardano 11%, and the whole market is just down. And it's not just crypto. Let's take a look at the stock futures. S&P future down 1.27%, Dow future down 1.51%, Nasdaq future 1.1%. If you've not seen my video on the Evergrande crisis explaining it, do go check that out. But in essence, that is what is causing all of this fear right now. So the second largest property home builder in China is about to default on about $300 billion worth of loans, and the market is very worried around the broader contagion risk. This is being considered as the China Lehman Brothers, and this has a lot of investors, not just in China, but just generally worried about market sentiment. So you can see the FTSE is down today in the UK markets. You've seen the Hong Kong index close down. And obviously, I've just shown you the S&P futures are not looking good. And the wider crypto market has not reacted to this news whatsoever. So, the momentum we saw on Bitcoin has taken a hit. Let's take a look at the charts. Sitting at 44,000. We've just bounced straight off here. We were going sideways here for a little while, around 48, going below 48 to about 47. And then it just fell down on this 4-hourly candle here. You can just see as the concerns got bigger and bigger. So they're due to default on 2 key loans on Tuesday. As well as that, we're getting the FOMC meeting tomorrow and the day after. So are we going to get a decision on tapering? We'll get a bit more of an indication on how Jerome Powell sees that going. So this is all weighing in on this market here, and you can see it's everything. Bitcoin's gone down, Ethereum is down equally, Cardano has fallen down. It's a wide market. You can see the red here. If I move me out the way, you can just see everything is red. And if you can take a look, let's take a look at the VIX futures, which gives us an idea of the fear and uncertainty in the market right now. And you can see here, let me go to the hourly candle so you can just kind of see how this reacts. So you can see here, boom, straight up. Let's take that as a percentage move. We are currently 25% up on the VIX. So the VIX has spiked 25%. Anybody who doesn't know, VIX is a measure of volatility and fear in the market. So you can see when the VIX goes high, there's a lot of fear and uncertainty in the market, and that is what has triggered that. And we can see the broader effect on everything else. So SPY is not open yet, but we expect it to come down, which will not look good. And coming back onto crypto, you can just see it's everything. This is a broad-based sell-off. And I guess the question now for anybody watching is, do we go in and buy the dip? Well, my advice is you should always have cash ready on the sides for this kind of a dip. I wouldn't go all in just now because we don't know how far this crisis can go. Anytime you get a bit of fear, uncertainty, doubt in the market, you have to take a balanced view of whether it's going to continue and get worse, and therefore you don't want to spend all your money now if Bitcoin's going to go to $30,000, is it? But likewise, you need to also weigh in the balance of, am I going to miss this dip? And the best way to deal with this is dollar cost average. Buy-in frequency, nibble. I like to call it nibbling. Just nibble in every now and then with a little bit. So when it drops now, I'm happy to nibble. If it drops a bit more, I'll nibble a bit heavier. If it drops to 30,000, I'm going to go heavy. And I think that's the kind of way you want to go with all your purchases. And I think you're going to get a wider correction in the S&P as well. So I've got a lot of my cash sitting in cash-like investments. So I don't like to keep too much cash, but I keep it in an Amazon or a Google, Apple. And then when I need it, I just pull it out because they're safe investments. They're going to go tick up nice and gradually, not going to do anything massive. And I'll just take that out and put it in any of my high conviction plays when it dips. So for me, I'm looking at a bit more Bitcoin, Ethereum, always dollar cost averaging into those. Cardano is another one for me. And then a few riskier ones, which maybe I didn't get to build a big enough position in. I mentioned I've got a really good cost basis on Solana, but I could do with a bigger position there. So my cost basis is good, and I've kind of fallen in love with my cost basis at around the high 20s, low 30s. That now I'm finding it hard to purchase when it was close to 200s. But now at 136, maybe a sensible level for me to kind of top up my bags on Solana. Other coins, I'm interested in. Avalanche, I am. The tokenomics, I need to do a bit more research into some of the tokenomics around Avalanche. Comment below if you want to see a video on that. Chainlink, happy with my position. Algorand, I do want to build a bit more Algorand in my portfolio. as well as probably Elrond. H bar, I've got enough H bar, and that's my layer one kind of plays. And then obviously I'm always looking at dot link to see if I can top up any more in dot and link. Another interesting one is Doge, and I'm just going to call this one now because it's sitting at 21 cents and it's not had a move. We've seen a lot of coins have a move, and Dogecoin never really had its chance. So I would not be surprised at all if Dogecoin was to erupt at some point. Maybe not straight away, but when we get our next set of peak on the fear and greed index, when people are being quite greedy and FOMOing in, I can see Dogecoin kind of jumping up. Definitely not in this environment where everything is fear related, but in a stable environment, I can see Dogecoin doing a run, and that purchase at 21 cents might be a bit juicy. So yeah, I'm just not rolling that one out, even though it's considered a bit of a meme coin. It's got such a large market cap that you've got to take it seriously. It's still sat there in the top 10 market cap. So there you go, guys. That's what's going on in the crypto market and the stock market. I'm keeping an eye on a few of my favorite stocks as well, where I can nibble a bit more, where I've not built out a bigger position where I'd like to. Things like Lemonade, high risk. Things like Enphase. I'd love a bit more Enphase, actually. Just kind of these kind of stocks. I'm kind of starting to make a list and put some price points in my head of if we get to that price point, I'm going to nibble at this price point. I'm going to go a bit heavier, and then if it hits a really low price point at a support level, I definitely want to go heavy in on these stocks. So you've got to be prepared for correction. Now, don't get me wrong, this could just pass, right? China could come out tomorrow and say we've had enough. We're paying off the 300 billion. Press print on the computer. Evergrande debt gone, and we move on. Now, is it going to happen that quickly? In my opinion, I don't think they're going to let Evergrande fail, but I don't think they're going to make it easy. They're going to make them feel the pain. They're going to make them an example for all the other debt-ridden companies in the Chinese society, because Xi Jinping cannot go out and just say, oh, I'm going to do whatever you want, be as highly leveraged as you want. We're going to save you because we have to, and we haven't got a choice, right? So I think a lot of people are saying, oh, is this going to be like the Lehman Brothers? I don't think so. And the reason for that is Lehman Brothers had double the amount of debt Evergrande had. They directly a banking institution, so they had everybody's savings in there. The contagion risk was far greater. And also, the US didn't have the same regulatory controls at their disposal that China has, right? Let's face it, China can go in and make whatever they want to happen. They can force people to take haircuts on their credit notes. And they can push this through and clear this mess up quite quickly. We know Xi Jinping's trying to have a broader tidy up of the debt-ridden society he's finding. He wants to fix that. He doesn't want thousands of people protesting in his country because they've paid for a house and the house is not being built. So I can see him keeping Evergrande up to some extent, even if it's just to finish off the 1.4 million homes which they've pre-sold. I think if they don't resolve that, there's 1.4 million houses that Chinese citizens have already paid for not being built. So that's going to be a massive headache for Xi Jinping. Does he want that for the sake of 300 billion? These are the things we're going to find out over the next period of time. I think this has a lot of similarities, from an investing point of view, and the advice I'd give you, this has a lot of similarities with how we want to deal with the US debt ceiling. I made a video on the US debt ceiling. That's going to become more and more of a problem and drive more and more fear, uncertainty, and doubt as we go forward. And I think as investors, we have to be clued in. We have to be tuned in, to understanding the movements of the market. And when that fear comes in with no necessarily underlying fundamental points which damage the conviction of our stocks, we should be prepared with cash on the side to buy on those dips, buy on those correction points. And then when the fear subsides, we come out in the green and emerge. So we got to be smart. We don't know how long any of these can drag out, right? Same with the US debt ceiling, same with this Evergrande crisis. It could be many months. It could be over tomorrow. It could be over today. Xi Jinping could write a check for 300 billion and clear this out. We don't know. We just have to be prepared for every eventuality. And the best thing right now is always have cash on the sides. Keep your conviction high on your favorites. Put mental price points around, or even plot it on the chart where you want to start nibbling, and that way you can detach your emotion when everybody else is fearful and you can see red on the screen like we can see with Bitcoin, Cardano, Solana. You go, wait, this is a great flash sale. Let me start picking up because I marked that Cardano under $2.20. I want to start nibbling that. Let me stick to my rules and start nibbling. Solana, I was chasing it at 200. Therefore, at 130s, I should be nibbling a bit more as well. So there you go, guys. That's what's happening in the broader equity and crypto markets right now. definitely red and not fun given the momentum we were trying to build with Bitcoin. It seems like every time we try to get some momentum up to 48, 49, break the 50, something happens and drives us down. So yeah, just another broader market, nothing specifically to do with crypto that could have been controlled. Nothing fundamentally has changed with Bitcoin or any of these cryptocurrencies, but it is just shows you how correlated Bitcoin continues to be with the wider asset classes, and everything's just red at the moment. So there you go, guys. There's your update. See you in the next one.